What's happening, family? So, today is the second Christmas day, as in December 26th, right? So, obviously, the banks are closed, but I do see some movements in the price ladders, right? When I look at it. So, I thought, you know what? Perhaps it's a good time to play around and, just trading with a SIM account, obviously, right? And, well, let's just see what we can make of everything. Now, just to be sure, right? Here is my SIM account, right? And we have basically a starting capital of $1,000, zero profits, right? So let's just see if we can perhaps, look for interesting setups, strategies, techniques, methodologies, excuse me, that we can basically try to utilize, right, at the time being. So let's just have a look then what is happening. Now, even though that, the 5-year T-bill, right, it definitely had at some point, I guess, made a nice move from all the way to the bottom to the top, right? And is now trading around, well, the most highest price level for the day, right? And as we can see here, the ZB, as in 30-year T-bill, just, came into that 114.01, and we can see that the Ultra Bond, right, is equally to the ZB, right, the UB and the ZB, and they are now at their highest. ZF has a little bit trouble of following them. And usually, if the T-bills start to rise, right, then in most cases, the E-mini S&P is invertedly correlated, right? So it should go down. However, if, obviously sellers at the T-bills, right, at the highest, if they absorb everything and start to attack, right, and the buyers get the impression that, well, we have tried everything, we have given everything, and every time, the sellers absorb all our contracts, at some point, if they notice that, right, they will try to limit their entries, I guess, right, their risk. And if they start to pull out, then it would be probably a fade trade, right? As in, instead of a breakout, we have a failed breakout, and then more often than not, the price will come back into a pre-breakout area. Now, if we then look on the Ultra Bond, we can see somewhat of a small mountain here, right, with a small valley in between, but, we focus on that breakout here, right? And now prices at their highest. We can already see that the sellers attacked very aggressively on the ZB, right? When the buyers tried to push the price higher, basically they absorbed everything, counterattacked, right? And now the ZB is obviously no longer at the high. But let's see if the buyers, because with just 50 contracts, they lifted the offer, right? So at some point, yeah, they may try to, do the same what the sellers did, right? As in absorb everything and, at some point test these sellers if they are still taking market orders, or at least willing to do so, right? Because at some point, if they don't attack back, then obviously the buyers will attack the sellers, right? And then if these orders are all, let's say, pulled out, then yeah, the buyers may produce a successful breakout, right? But if not, if the price goes down, right, let's say into that pre-breakout area on the UB at this price level, right, and we have, let's say, well, a small low volume price level here, which could be, on ZB, an area where price may come back into, well, let's say this small mountain, right? So it should be interesting to see what will happen. And here on the ZF, price is now definitely creating a thicker volume at the top, meaning that, yeah, there is battle going on between buyers and sellers. One party is willing, or at least is trying, right, to push the price higher, to generate that breakout, right? On the other side, sellers obviously are giving their best to hold their ground and see which party first throws the towel in the ring, I guess, right? So if the sellers win, then, buyers will get out of their positions, and that will generate, new money, scary money together. It will push the price lower, right? And it may go very violently through those, valleys here, right? And even here, we have a volume that definitely stands out, so should be interesting. I mean, at this point, yeah, this could be a interesting area to trade, at least, on the ZF. But my point is, if the price indeed decides to go lower, right, we are no longer at the top of the treasury bills, right? And we can see also big number here and here, right? So it should be interesting to see if the sellers indeed can hold their ground and defend that level at the breakout area. Because if the price then should continue lower here, more often than not, it can continue higher there, right? Now, at some point, I think we can also say, if we look at the price levels here, that price now somewhat has a range where it trades within, right? So should it break out of that range, it could come into this previous battle area, right? Going through that valley, and obviously the same may go for a bearish breakout, right? Based on the volume profile. I mean, the price may go a few times back and forth within that range, and at some time, yeah, if you would like to trade the breakout, at the top or at the bottom, right? We can definitely do so while keeping an eye on the T-bills, right? And also here, right, the Nasdaq can act as a indicator, or because it's a little bit more volatile than the E-mini, so it could act as a leader, right, when it comes to indices. I see a lot of buying contracts here all the way to the right, but sellers absolutely absorb everything. Look, this number here, right? It is getting bigger and bigger. It is not reducing. The numbers here and here stay about the same. They're not pulling out, right? And so far, it just means that the sellers are holding their ground, right? But if the sellers are not able to attack, just holding their ground, and they just did, right, with a counter offer of this amount. So first they basically absorb 3,000 contracts, right, and then they attacking with 1,000 contracts at this point, right? But my point is, if the sellers here absorb everything but are not able to attack, then the buyers will retest them again. At some point, the sellers may think, well, the buyers will keep attacking, and if they pull out their positions, then obviously the buyers are able to push the price higher. But if the sellers at this level absolutely absorb everything and now attack very aggressively, right, and winning grounds, as we can see already, then obviously the buyers may scare out of their positions, right, because they see the willingness of the sellers wanting to push the price lower, right? And if that's the case, then at some point buyers may get scared and get out, because again, the price moves quicker or faster through valleys than these areas where previous battles had been fought heavily, right? Most of the time price will go up, down, up, down, up, down, up, down, perhaps one tick down, one tick up, two ticks down, two ticks up, and then come back, and then again, but let's have a look what is happening here, right? So the buyers are attacking with 100 contracts, but this number is not reducing. Instead, it's getting bigger. Okay, so now we should have a tick up, because now the buyers have won that ground here at this price level, right? But we don't see a tick up so far. And there you go, right? So now we had that tick, okay? We see here that the price is still within those block trades, price levels, price levels, right? These are, let's call, block trades, right? So apologies for the confusion. So we see here a, 3 price levels, which are very thick, obviously. And within those price levels, right, the price moves, a little bit slower in general. Should it break out to the downside, it should go faster. And especially if, here a pressure point on the ZF, if the sellers are able to push it another tick to the downside, then the buyers will probably do a last attempt here at this price level, right? And if they pull out, then the sellers will have a few price levels in which they can you know, really drop the price in a matter of a few seconds. And now we can see the UB, which is obviously more volatile than both the ZB and ZF. We can already that it moves away from the top, right? And again, right, the price came on the ES somewhere around that top area of our range, right? Failed to break out and now is going back to the downside. Now we see here some absorption, right? If the buyers should be able to attack, sellers withdraw, then we can even look for a buy position here, right? To retest the high again. And if the price gives me some signals to get out here, right? I will either get out at break even or savor 2-3 ticks instead of perhaps 8 to 10 ticks, because at some point it may go for that breakout on the downside, right? But we will see what will happen. So if we plan to trade price action within a volume profile based range, right? If the price has come to the bottom once, to the top once, to the bottom a second time, here to the top a second time, you know, then those breakout trades will be, you know, I guess higher probability at some point. Why? Because imagine that we get in on the bottom and we target here, price comes here, right, and decides to go down. Yeah, so we can basically look for those context within the price ladder, obviously, and as I mentioned earlier, get out, right, at break even, or, you know, guarantee a couple of ticks, right, instead of the initial target. But yeah, let's just see what will happen at this point. You just have to be patient. All right, so here on the ZB, we see a lot of red numbers, high numbers, right? Here on the ZB, they are bigger than, you know, here, the buy contracts. And now on the ZF, we see somewhat of the same. So yeah, there are definitely sellers there, but it also could indicate that, you know, at some point, buyers may either still attack to make an attempt on that breakout, right? Or they will pull out and then the sellers will be able to push the price lower. Okay, so let's see. Interesting. And look here at the top of the range, what do we have? 215 contracts being traded, right? From the buyers, absorbed by the sellers. Immediate counterattack. Buyers realize that, okay, there can be either a potential iceberg order at the top. Why? Because all the buyers who got in at the bottom obviously would like to resell their contracts to the sellers, right? Because there are buyers here who want to see a breakout, right? So he's basically making profit from those buyers who basically missed that entry at the bottom. And look what happens here, right? We see also on a micro, volume profile is thickening at that 0.94 level. And we now, well, let's see. if we can catch a position via a limit order. But sometimes, as you can see, the market is just too volatile at those areas, and it just may leave you, right? So that could have been already 3 ticks profits. Okay, now price came back. Let's just focus on, did it come back to somewhat create efficiency or so, right? Now, if it's, you know, able to pass this valley here, it could retest that other mountain, because if it leaves one mountain, rule of thumb is, in general, it will retest that other mountain, right? So at some point you can say, okay, let's say 2 points of profit or 8 ticks, like that, right? Or because at some point the price may also go from this mountain through that valley to that mountain here, right? Now let me just put some stop on my entry point. Better yet, let's see. Yeah, like if the price decides to go again at this price level here, right? Oh, there it is. That was my TP hit already. As you can see, it goes very quick. And now I have basically re-entered here. And if this momentum can keep up, right, then... But now if the price comes back, I can decide to get out with 1 tick loss, right, to limit my risk, or even go with a 2 tick. But, you know, that's the advantage of trading breakouts, because if the market comes back, I can decide to get out, but it is moving slower, right? So looking at the price ladder and the interaction between buyers and sellers, I can decide, well, you know, perhaps if I see absorption and backtacking created by the buyers, I can decide to stay in. And as you can see, the price is now making another attempt to go through that valley here, right? Yeah, I mean, I see a little bit absorption here. And the sellers are attacking at some point, but let's have a look. 120 somewhat orders here. Let's see if, okay, here absorption. Yeah, if the price comes near this price level, if these will be pulled out, right, then probably it is spoofing, right? And another 100 here. Yeah, so you saw that, right? Those orders immediately disappeared. So that gives me the confidence, right? And also looking at the T-bills, well, this one still goes 1 tick higher. Okay, so price basically is coming back to my entry. It goes very fast indeed. But look at this, right? Again, there are definitely a willingness of buyers, right, to push the price higher. So what I'm going to do, just in case, I will place a stop loss at my entry point, just in case if the price goes very violently back against me, again through that valley, right? Because if it's able to pass through it very fast to the upside, the same goes for when it passes back to the downside. So here I can either, okay, here 180, it stays the same, and now it's pulled out. As soon, so at this point, just to guarantee profits, I can immediately get out, right? So let's do that, boom, right? And, you know, if the price continues higher, nothing prevents me to take another position, right? But now let's look at the T-bills, because I see this one again coming to that high, right? So it could be that the E-mini S&P could go back through that valley to this mountain, and here that previous battle will be fought again, right? Because if we take fair value and auction market theory, everything in consideration. Yeah, like price may range in this area, it may range here, it may range here, right? It may go very quick to those areas, trade here for a while, it may go back, trade here for a while, it may go here, trade here for a while, and it may do that, right? You know, repeatedly. So let's just see if, okay, the sellers are definitely attacking, but look, with one contract, they were able to lift the offer, right? So let's just see if at the bottom of that range, the volume profile is thickening, right? And the buyers are definitely present there, right? So I took another buy position, but this time it's a little bit risky, right? As you can see, boom, there you go. But that was exactly my intention to show you guys, right? If you take a position on the, well, potentially volume profile based range, you know, whereas here you trade on a breakout, it may go very fast in your direction, and when it's going you know, against you, it is or will go slower. So meaning you will be able to get out either at break even, you know, 1, 2, perhaps even 3 ticks. But now it's the opposite, right? If it comes back, it can go very violently through that area. But looking at the overall context, as I mentioned earlier, right? Let's keep an eye on the T-bills though, because I see they are all at their highs, but here a very aggressive attack by the sellers. And in the meantime, you know, the price tends to come back, at least for a little while, to around my entry point. I still have 2 ticks profit. 4 ticks. Well, let's just get out with 4 ticks, guarantee some profits here again. Oh, and you see that, guys, it did not, you know, got out of my price level, even though it came there. Probably I was somewhere, you know, last in the queue to get filled, and that's why. But, and there you go, boom, another 4 ticks profit generated. So far everything is nice. We see and look at the T-bills. I see a tick up here. And by the way, let me just center everything, right? Ooh, now look at this here, right? We have the potential why I'm entering here, or trying to attempt to enter here, because here on the Nasdaq, we had almost a volume profile breakout. And obviously the Nasdaq is a little bit more volatile, right, than the E-mini S&P. So should it break out, it may go very rapidly and leaving me behind, right? But I can do, yeah. So I could have sacrificed my tick there, like I did now, and now it comes back, right? So, okay. And as long as price does not go back through this valley here, right? I see again absorption, buyers are not pulling out, right? Now, okay, very aggressive by the sellers, but look at this immediate counter attack by the buyers, right? And as long as it does not break out through that mountain here, it should be good. And let's see, yeah, it should backtick. I mean, it should go lower, right? Let's see, I see a tick up on both. Yeah, it can be good. Ooh, let's try to get out with 1 tick loss. Come on, not filled. There you go. Okay, so now the price, if it now goes to the downside, but again, right at the bottom of that mountain, buyers showing somewhat of, you know, presence. However, if the price, looking at the Okay, this one comes down. Yeah, oh. Let's see if we can catch a short position there. Right, and let's go with another 4 ticks just to scalp really quick in and out, right? Oh, I see a lot of... Yeah, it's time to get out, guys. Well, I just got out manually because the price otherwise will go very violently against me. Right. And I am going to enter with a limit order. I just got filled. And again, this is the thing when you trade within that range, right? Especially if you enter from somewhere in the middle. But I saw that the price went back here, and here it already created a thick volume. Here it failed to break out. So if the T-bills go down, right, I should at least see some reaction on the E-mini S&P. Even if the market is now 4 ticks against me, I can decide to get out. Or, you know, I guess it all comes down to decision. Or if the market again tries to attempt to make a breakout out of that volume profile, which it did not. You see, I see a lot of buyers again attacking. But still, if it does make a breakout, I can still decide to get out. But again, I can also decide to hold my position and, you know, see if indeed the market will again go higher. Now here I saw a lot of absorption of the sellers, right? The buyers are holding ground. Here I see definitely block trades. It can be spoofing, right? As in the lure technique again, right? And the lure technique meaning the buyer here is basically encouraging everyone to sell to him. He loads the price ladder here with fake orders, letting sellers think, yeah, we have a lot of traders behind us, so let's attack, right? Some even want to front run, and the buyer here buys all the contracts, right? At some point, that same buyer who placed the dummy orders here at the sell side will pull those orders out, and then the price will move to the upside in a blink of an eye, right? So let's just keep an eye on that if we can utilize the lure technique at this point. So if the price decides to make a break even, I mean not break even, break out to the downside, right? We should be cautious. But as long as price holds that level, and you know, like I said, if the lure technique is at that point in play, all we have to do now is watch if the contracts here are, you know, getting smaller, and here the limit orders are not pulling out, basically. That will indicate that the sellers are losing strength, right? And at some point buyers will realize that, and that one big player or multiple buyers here, after absorbing all those contracts, they will basically attack very violently, pull out those dummy orders, which gives the market free way to move it to the upside, basically. And that can be followed by a volume profile breakout, and even, you know, since there is a very small slope valley, so to say, right? Let's see. Yeah, it may even go all the way up to the daily high, right? To create a, well, traditional breakout, I guess. And here I see a lot of buying power on the, you know, ZF, right? Sure, sellers are somewhat absorbing and attacking, but the buyers definitely hold their ground, right? Meaning that, you know, if the price goes higher here to the top side, I should be cautious, because then I rather would get out of my buy position and look for a potential short, right? Back into this mountain, so to say. But from the looks of it, let's place a stop order here. Oh, let's see. Yeah, and that's the thing, right? I mean, again, it all comes down in making decisions. If I place a stop order, price may come boom, boom, go higher very quickly, right? Hit and run, basically stopping out everyone, and then before making that huge move to the upside, right? And again, that is all a basically mind game, manipulation of both parties, right? Who is bluffing, who is, basically trying to manipulate who, right? And we can follow here on the 30, 140, this one, if it's with 2 contracts. No, you see, now the sellers realize that, okay, those intentions of the buyers are still there. Now they systematically pulled out there, in which case the price went very quick, 2 ticks to the upside. Now look at this block trace here, guys. Let's see if the price comes near it, if they will disappear. If yes, then it could be beneficial to us, right? So yeah, like immediately those contracts got pulled out and now have somewhat a lower, right? Okay, I just resetted my audio engine because I don't know what happened. I just heard myself as a transformer. I hope it's not noticeable in the recording, and if yes, then obviously it was just one sentence. So now looking at the price here, it failed to make that breakout right here at the top. So it should be interesting. However, the T-bills, look, they all came back. So even though it failed the first attempt, I am willing to still hold my positions, right? And just, let's say another 2, perhaps 3 points, right? Just in case if it goes very volatile, and I can always decide to get out at 2 points if I see after 2 points somewhat of a absorption, backticking, whatever you have. Again, a failed attempt by the buyers, right? The sellers attacked, buyers absorbed basically everything, holding their ground. And let's look at this here, contract 115. Will it remove or get smaller as soon as price hits that level? Yeah, like immediately a lot of contracts pulled out, right? And now the sellers are trying to bluff, right? Because here is where the bluff come in, right? Like the sellers can show very small contracts so that buyers may think, okay, we have just 20, 30 contracts to go, right? Let's keep attacking so we can initially make that breakout. However, the same bluff may be played by the sellers, buyers, right? As in, if it fails at some point, then it could be a fade trade instead of a breakout, right? As in, the price may come back all the way to the pre-breakout area, to the bottom, right? But let's place a stop order at this point, right? And at least guarantee 2 ticks of profits. If the price now comes back, I can always consider another entry if it comes back here, right? If it stops me out, come back here and give me, I see a lot of absorption. Perhaps it is time to get out manually. Well, I see here on the, yeah. So let's see. Yeah, okay. Nevertheless, 2 ticks of profits, right? Now just let's have a look at how the price will react. I have just entered with a market order, or better yet, re-entered, right? Because I see here on the Nasdaq again that the price may break out of its volume profile. It has, offered 40 contracts. I see the T-bills, the UB, ZB all tick down. Here I see a lot of absorption of buyer contracts. Look at this, guys. Sellers are attacking very aggressively. So if the price now goes lower here, it should go higher there, right? And let's say that this could be a last potential, trade, right? We are somewhat off 40 minutes, well, exactly 40 minutes and 20 seconds to be precise into our session. So should that breakout occur at this point, then it should be interesting. Generating another, about 2 points or 8 ticks. Yeah, it should go there, right, to 0. Yeah. And now let's just, I see. That was basically a sign that, or at least the first sign to prepare myself to get out, right? Because I also saw a lot of contracts here, and while I'm talking and explaining, look at this, guys, the price came very quickly back to that area. And let's just see what will happen at this point, right?